Hey everybody, welcome to the show. Welcome to Tuesdays, 30 minutes of awesome. Hi. Excuse me. I yawning like crazy all of a sudden. Been a long Monday. That's the only way I can put it. It's been a long Monday. Monday on a Tuesday, I guess. And welcome to the show, everybody. Hey, Mad, Diane, Jan, Mary, Will, Ivan, and Svenborn. Thanks for coming. Last week, I do apologize. I was on the road. Maybe I'm back. That was interesting. Whole screen went black. Says we're connected. Maybe. I guess let me know in the chat if you can see me, hear me. And yeah, awesome. Technology, can't live without it. Can't kill it. Anyway, moving on. All good. All right, thank you. All good in the hood. So can hear you. Good. Thank you. All right, so we just came off the worst week in the markets here last week. I mean, we saw Nasdaq down like 2%. AI disruption fears roaring back into the topic. Software stocks have been crushed, and we saw good news on inflation, but that didn't seem to matter. We saw jobs report, and the market just kind of shrugged and dumped on out, and it's rough. That's volatility. Finally getting a little bit of volatility back in the market. I like it because it makes pricing good for some of the trades I do. AI disruption worries continue to disrupt price action, and that fear could be well founded. I don't know if anybody's paid attention to these open claw type bots that run on Macs that, I've been talking about it a couple weeks now. I got my Mac Studio after putting it on order for a few weeks, and it definitely has some nuance to it. I think it can be simple. Of course, I'm doing non-traditional type things to it because I'm cheap. I don't like to just spend $1,100 a month at Anthropic. I'm more like trying to get the same kind of performance, but spending like $20 a month. So there's a few things you have to do to make it do that. And, it's technological challenge, but not anything beyond me. I bought the Mac Studio because it can run local LLMs, and it does that very fast. But to get the extra whiz-bang features like image processing and stuff like that, I have to use a cloud model. So I found, funny enough, the same model provider that runs local models can run some cloud models for a relatively low price, and it's pretty dang good performance. $20 is reasonable to me. Several $100, not reasonable. So, but this stuff, it does vary which model you use. Right now I'm on, I've tried out DeepSeek, I've tried out Minimax, right now I'm on Kimi because just a few minutes ago I gave it some screenshots off my trading platform, and it was perfect. It was flawless. It knew the exact trade I was doing. It went and pulled where the market closed and then told me that I was profitable at the end of the day. And it's blew my mind a little bit. And that, the model I was using before was just making up crap and throwing spaghetti at the wall. So it definitely does depend on the model that you're feeding it. And, a lot of people are throwing a, Opus 4.6 at it. They're paying hundreds of dollars to do that. I'm paying $20. I had $20 for a month, and I've used like 1% of my credits for the week. The credits refresh weekly. I'm actually using 2 bots on the same credits. So I've got 2 of these suckers I've spun up at this point, and It's interesting. That's in a nutshell. I would say it's interesting, and the software disruption fears are probably. I mean, think about it. For years, you've had to go with I've talked about this out. Any industry out there, any sector, anything, you basically have one main company that's going to own most of the market share. Then you're going to have a second, possibly a third competitor that have reasonable market share. Their product does the same thing, it fits the niche, but some people prefer it because of XYZ feature. But you're basically forced into one of those top three. Then you have a few others vying for the scraps that are left in the market. I mean, think about it like QuickBooks. If you've ever run a business or tried, basically you got QuickBooks, and they kind of dominate the market. If you don't like QuickBooks, you got a few other options, but mostly you're going to use QuickBooks. And then for accounting, it's like if you're going to do CAD design software, you got AutoCAD, you've got MicroStation, and then a handful of others that are kind of specialty niche things. So if you don't like the way that the software works for the main category, you're going to give up compatibility and resources, people knowing how to use it. You're going to give up that to get the features you want. Now, the interesting thing with these AI agents is that, and the real big worry out there is that you just tell it what you want. What specific things do you need to be able to do? You tell it, just talk to it, and it builds what you need. Now, I'm not saying that, these things are going to replace AutoCAD or Photoshop or Adobe Premiere or, QuickBooks overnight, but as far as little niche solutions, these things are building things that businesses, they're fixing pain points for businesses, making things simpler. And it's without having to go buy things from big software companies. And that's where the real, I guess, fear kind of sparked, ignited and turned into kind of the forest fire that burned down the markets. And you could agree or disagree about all this, but, I bought a Mac Studio so that I could not be left behind in this conversation. It's evolving very quickly. We've already seen, just since I've had it, there's already been like 2 new versions of the bot come out, or and luckily I didn't install it till the latest version. But things are evolving very quickly, and it's interesting. And the AI models that power it, like I've like switched through, like I've probably tried out 8 different models already. So having a provider that doesn't lock me into just Anthropic, using Olama as my provider, it's been kind of an interesting situation. So this AI anxiety, it's real. I think for a lot of, we're seeing like Microsoft. I did a morning show last week. How Microsoft's predicting that possibly upwards of 60 to 90% of white collar mid-level workers could be replaced with some of this stuff. And it's just kind of wild. Like I've got 2 of them. One of them specializes in content creation right now, and the other one specializes in trading. That's what I've kind of broken them up to do. So, one's gonna be studying, helping me try to build YouTube content, and the other one sitting there trying to help me figure out trades. So, there's been lots of people predicting we're going to see a crash. There's been lots of people predicting this, predicting that. Big flush is not in the chart at the moment, at least not in a clear way. It could drop a couple hundred points. We can talk about that in a minute. So we're coming off the worst week so far in 26. I don't see a big setup yet. I think we've got more to go, but it definitely could develop into something bigger. And, it's just wild. We have supposedly a strong economy, unless everybody's just making up the making up the numbers, which is always possible. You know, the cooling inflation. You know, could the Fed cut rates? We're having earnings beating expectations for the most part. AI capex has been kind of the big, that all. It's funny because all these companies said, "Hey, we're going to spend billions of dollars on capex, capital expenditures, to expand AI data centers and stuff," and then when they actually started putting the numbers up, people are like, "Whoa, whoa, 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 wait a minute. Why are you spending that much money?" Microsoft got punched in the face. Meta got punched in the face. You know, Google. People are just like, not so sure. And so we're seeing some uncertainty around all of that. AI spending, the capital expenditures to build the infrastructure we need. And then where do we get the power? So we've got storm clouds, gold sitting there as a potential bright spot, but we probably have downside to go there too. And it's a situation. That's the best way I could put it. So today the market didn't really do a whole lot and just kind of drifted here. We look at the QQQs. We did pop up out of the top of the range, but we did end up right dang near where I thought we would, just a little bit higher. And then SPY popped out of the range and just kind of ran away from where the options were this morning. So we do have that bigger level sitting down there at 6, whatever it was, 675, I think. Pull it back up and look. Dun, 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 dun. Let's see, SPY. The gamma exposure. I guess I should circle back and hit the disclaimer. See, we did close it up right there, but the level down here on the 20th, I think it was this morning, hanging out 680 maybe? 675 right there. So 675. That big level, 500, almost $600 million. We may take a trip down there later on this week. 3.3 billion at the close. That's, as we get into the close, people pile in the options and it creates a pinning effect. So jumping back over, hitting the disclaimer real quick. All trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instruments. So be careful trading stocks, options, bonds, forex, futures, cryptos, treasuries. You may lose money. And if you want somebody to tell you what to do, what buttons to push, there are people you can hire for that. Not me. I'm just a guy on YouTube that makes predictions, got some unicorn dust sprinkled on the market. Sometimes it comes true, sometimes you feel like a nut, sometimes you don't. And I tend to get it right more than I don't. If you've not seen my year-to-date performance, there you go, about $68,000. Looks something like this. Started funding the account back in April 15th, about 10 months ago. And there's the profit loss curve. Not too shabby. Nice upward momentum, growing bigger and accelerating a bit. So, yeah, looks pretty nice, right? Pretty nice. Up and to the right. That's what you like to see. This account, I had basically left it for dead for a number of years. It's at Robinhood. I didn't really like Robinhood platform back 4 years ago, and I guess 6 years ago. And I just kind of left it alone. And recently I was like, I'm going to push some more money, push more contracts, probably for smaller amounts of money. And as you can see right here, $32. So I wanted a platform that didn't charge me a ton of fees on pushing a big number of contracts for a small amount of money. And Robinhood doesn't charge any fees on that. So works out in my favor there. And you can see, up and to the right. Where's the big volatility? Where's the big drawdowns? Where's the losses? They're right there. Not very many. Don't take big losses in this account because I don't like to lose money. So up and to the right. That's the goal. Stable, repeatable, consistent gains. That's what the name of the game is right there. All right. Pop back over the chat. Welcome, everybody. We'll see what happens. As always in the market, anything's possible. But the most likely probability is not just absolute chaos. Looking at the S&P, we are probably set to go a little bit lower. How much lower? Well, we can just kind of clean this up and talk about it. So we came off the highs back here a few weeks ago. There's no reason to zoom out much more than this because, even on the daily chart, it doesn't lend much more to it. I mean, we could go off of this chart and be easy enough. You've got the high right back here a couple weeks ago. You've got this low. You've got this high, lower high, even though it's kind of sideways and choppy. We've kind of been in that for a while. If this gets an extension, the downside could be like here at this point. That's what we're looking at with this setup. Not huge downside. Now, Nasdaq is a different story, though. And this is where we could see more flush out. We're definitely grinding on this support right here. And when you look at this bigger picture, we topped out right back here. And this was the top. This is a lower high. This was the initial drop back here in October and in November. So this initial drop right there to there, projected off of this high right here, leaves us room for bigger downside in tech. Big tech, just to get to the normal kind of correction, we'd be dropping in here and possibly getting continuation down here. That's what we got cooking right now. That's not present in S&P. That's why I say, like, we could see some flush in the market. Rotation out of big tech, more pain in big tech, but the S&P's chart doesn't support the same thing. And this one may be dropping here, but we don't have that same kind of downside setup. Now, even if this high back here in October was the same high and this low here in November was the same low, and this, we just happen to go higher high here, that would still leave us with only a nominal bit lower on the S&P, maybe get back to the same low we had right around Thanksgiving, right in here. But that's still holding up really well and still sets us up to go even higher. Now, what I think is interesting is that we're kind of playing these out right here. Like, we're getting some chop in here. Now we're probably in one of these kind of pullbacks right in here on the Nasdaq. You can think about it. We've been hanging out at 25,000. We're probably getting one of these pullbacks. And then we could go on an epic rally. And this would match the .com era. Like, this is the analog here. The blue is the .com bubble, if you will. So far, the AI bubble's just kind of been hanging out, cruising along with it. And these were done back in, I think I pulled this chart back in the summer, maybe the fall. So we're behind a little bit on the red, but still kind of churning in the same area. S&P, it's kind of like we did this part right in here. Now we're kind of churning in here. We could pop up again and then get a bigger pullback again and get some more volatility in the S&P. That might be what we see as we churn through this kind of zone. And maybe it was, maybe we hit that high right there and we're doing, it's not perfect. So the pullbacks could be a little bigger and, a little bigger, a little more volatile, little swings. It's not perfect. It's just kind of an echoey thing. But it's amazing to me that the pullbacks all kind of line up so far on the way on both charts as we grind up into this. It's different this time, AI narrative. So it's possible that we have a whole new world of potential crash. So I just watch out. Then Russell, whole different kitty here, whole different kettle of worms. This thing spent a good long time consolidating, number of years. Back in 21, all the way over here, we finally broke out. this consolidation. I didn't really expect it. Like, this had a downside setup, a very big downside setup. But then we made this move higher. And the caution here to me is that we can still hit this 1272 right here. You know, we can still hit it in full and roll over, and this be the A wave down, that 1, 2, 3, B wave up, and then a potential C wave that comes all the way back down in here. It would be like a running flat. It's kind of a 3 wave down, a 3 wave up, and a 5 wave down. But the 5 wave down could also come down lower than the A. If we actually make a higher low here, it would be bullish for what happens out of it. But if we make a lower low here, it could develop into something worse. So we'll just have to keep an eye on Russell. If we start breaking down below these highs, though, it's a warning sign that we're going to come on down bigger. But right now, it's still set up bullish, and 3,100 would be the upside. So, do have resistance up there at, you know, that 20. I think we tagged it, but yeah, we got resistance right in there, that 27, 28. We could push through it just a little bit, but if we're going to push through it a lot of it, we're going to go on up to like 3,100. And the Russell index here, a little more clear on that, at 3,109 would be what I was looking for on the futures for Russell. Now, oil is stuck in a range. We've been talking about this for a couple of weeks now. The top here, the bottom at the roadmap line, and then the bottom down here at this kind of crossover situation. And then if we break through that, it's likely we're going to push to lower lows, probably down in the 40s, you know, at least to 50, if not in the 40s. And it's possible if we get down to 50, we may bounce and prolong the actual bottom, but it's kind of inevitable right now that we're going to push lower. Gold, just kind of stuck in this range. It has potential to pop, get one more move up, but it also has this potential to finish the correction here. This A down, this possible B maybe finished with that slightly higher high, and then this C would finish this up down here. But it could be that this was an A up, a B retrace, and we need the little C pop to finish it before we come down. Proportion wise, it's possible to come up here to 5,400, but pattern wise, we could just flush out now and finish this baby up. Don't know which one for sure. Neither one looks overly bullish. You know, these are big numbers. We're talking 5,400 and 4,000 down here. So that's before gold started this whole bullish thing, it was just sitting at, you know, down here. For years we just consolidated at like 1,800. Now we're talking about an 1,800 point swing. So that's just kind of wild to think about. And Bitcoin is probably in a crypto winter, and I outlined this path, talked about it pretty ad nauseum. Yesterday I did crypto special and just kind of went through it. So if you missed that, you should go check it out. All right, that's kind of the high level stuff. You know, I cover most of this in the mornings. So better late than never. Good to see everybody. And we're going to go ahead and do 30 minutes of awesome here. I'll do at least 30 minutes of requests. And, you know, if we get to the end, we'll wrap it up. But if we don't, we'll do an Ask Me Anything with channel members. So Kimberly's hanging out at the Biltmore, so she's not in the chat tonight. So we'll just kind of see what's up. What's up? So rules of the game, capital letters, and one ticker per person per request. Cryptos, we did that yesterday, so I'm not going to hit that again much. If you got crypto requests, come. Should have been here yesterday. And like I said, I'll hit as many as I can. If you make a request, let somebody else go. Preferably 3 or 4 people go before you make a second request. Unless you're a channel member, then hang out for the Ask Me Anything, and I'll take all your requests at the end. So, perk of being a channel member. If you want to be a channel member, switch over to the Ask Me Anything at the end. click the dollar sign under the video. I mean, it's cheap. It's like $5. I don't really ask giant money for that. So, all right. Now we got a few requests. So CRM downside potential is nearly complete. So looking for this to hold here. If it doesn't hold here, 160 on the downside. But looking for this to hold. I've looked for this downside for a long time. And then I've had that down there for probably since early last year when we made that initial drop. I had this potential down in here. And we'll see if we hold it. So looking for this to hold that area where it is. It could get down to 177. And we want to see it hold there. If it starts pushing through 177, probably coming on down to 160 or even lower. So that's CRM for you. Ethereum is bearish. Plain and simple. That's probably going to make a lower low. It's in a watermelon seed squeeze, which is a triangle, higher lows, lower highs. When it breaks, my guess, since it came down into this, we might pop down. Now, if this is the first move up and then this is the consolidation, then we may see a secondary pop and then continuation lower. So it's very similar to Bitcoin. TER, like I said, you can check out cryptos from yesterday. TER at the target, watch for a pullback. That's kind of the long and the short of it. It has gotten up to 302. 432 would be the next upside fib ladder level that I would expect. BMY is the next one up. And as long as we got lower highs, that's dangerous for getting more further downside right there. I'd be careful. Very, very careful here. AppLovin. Can't seem to confirm a bottom in place. And without a bottom in place, we could see this down in this area. Gap filling. So that would be what I'm watching for. Like I said, all that the fears about AI coming for software companies, it's not that crazy, really. XLP, looking for 96 on the upside, but this was the upside target right there off the last consolidation. You can go off of this consolidation also, which was basically the same, and we hit the target. So I would watch for a retrace back, retest the breakouts, possibly the roadmap line, and then next fib lines up 96 and 100 there for XLP. ADSK looks kind of bad. Made the high back here, first move down, retrace, and just you can see there's one of those watermelon seed squeeze things. We popped up, and yeah, it just hadn't been awesome for Autodesk. It's software I use often. Continuation right down here. I saw Adobe's giving out their Animate software, so that's kind of interesting. That leaves a few choices left for animators, since Adobe is stopping production or sales of the animation, or I guess stopping the product line for animation software. So they're saying they can't compete with Maya, and I don't know, maybe 2D cartoons is not the way of the world. So AWR, I wouldn't touch that. There's no trend there. I mean, it's like a trend down, but then we're sitting on the support that's been here for a long time. So could be another small pop, but this just looks pretty bad. It was on the morning list for a setup, and I mentioned how it could, in the short term here, get a pop up to the target, like 77, but the longer, I was like, this is a downtrend. The roadmap line is pointing down, so it's not exactly the strongest one to be chasing after right there. ACN, always want to say that's America's Collectibles Network. America, but it is not. First move down, retrace. We're in the target for support. Time will tell if we can hold or not. Could push on down to 200, 198, 200. You know, that's essentially a big ABC. Absolutely beautiful correction there. A absolutely B, beautiful, and C, correction. Kind of got proportions in here. They overlap a little bit, so not the cleanest for this being done. It could extend lower. I'd be not trading that myself. GRBK, well, that was cool. Green brick has the upside potential for 90 to 95. Kicked it off back here. We did a little more retrace, sat on the roadmap line for a couple weeks, months. Now we're popping up, and the target's right up here, 90, 95, and then 111 above that. So not horrible. Morrow, we talked about quite a bit yesterday during our Turnmire Trading Lab, and it is sitting on the big 618. That low, that high, we're sitting on the 618. If we push on down, we'll be looking at $5, and if we get below $5, it's probably game over. Probably going to $1 or less. So this is support. If we don't hold this, it's not looking good. I already booked a $34,000 loss myself in January, and they took on way too much debt. That's the big change. When they started adding debt like crazy, this was the fundamental change in the story. And they just grew it even more. And that's not a path to success. Historically, they had no debt. And that was the reason that was my favorite miner. Then last year late, they took on debt. And then they've been climbing it and climbing it. And now it's climbing at a faster pace, trying to copy other Bitcoin miners. It hasn't worked for any other miners. You had a strategic advantage with no debt, but then took on debt. So that was stupid. And probably not long-term viable. Because their COGS are now exceed all their revenue. It was stupid. Plain and simple. So that may have busted. They may have busted it fundamentally. So just not a fan of that. We talked about it quite a bit yesterday during the Turnmire Trading Lab roundtable. I'll get that posted when I can. Estee Lauder. Bounce off the roadmap line. And here was the high. Here was the low. And here's the move up through the 618. That sets the target, 127, 131. BMI. That's danger. Danger, danger, danger. Come on, mouse. When we fill this gap, which we're pretty darn close to doing, that can lead to a lower low. Yep. I'd be careful on BMY. There's not a lot of stuff on like, or BMI, excuse me, BMI. PayPal. PYPL. Long term, from all the way back here in 22, I expected to come down to the 42 area and try to find some support. Poking a little bit lower. There's a possibility to touch down at 34. The longer we spend at the bottom of the end of the range, the more likely it is we come down and touch 34. If we can get back up out of here, we have resistance at the gap down at 50. And we want to see it build some sort of higher low and set up some bullishness here. So for a long time, I've been expecting this to touch down here. Years. Now that we're down here, I need to see some bottoming type of action. Positive move. You know, right now we didn't just touch down here and recover. So that's a sign of additional weakness potential. Bottoms are usually an event. This is not the kind of price action that's an event. And when something goes, that's an event. This is not that. CBOE. Golly. CBOE. That was the last big pullback, and it wasn't even, touch the 1272, pulled back again. So I guess move this up. Look at the next proportions. And we hit that one and pulled back. Put that up here. Yeah, so 294 maybe. But we kind of need to pull back to the roadmap line. Haven't been back there since October. It's time. So 294, 304, but then support down at 250 for CBOE. BWMX. There's no trend here. It's a sideways and then a pop, and then could do sideways again and drop or pop, either one. Yeah, just a lot of chop at the bottom here. You're like, well, it's a pretty big range. Yeah. 7 to 21, 14-point range. It's just kind of bombing around here. Not really doing anything bullish or bearish either way. So, I don't know. Doesn't really speak to me. BM1. Still has downside potential there. BMI and BMI. Badger meter and BM1. Yeah. So Bristol Myers Squibb still looks like downside potential. I think I covered that one already. Anyway, somewhere up there, maybe, possibly. Yeah, I already hit that one. So, LITE. Please try to keep an eye on the chat. Don't re-request stuff. Light, there's no trend. Trend is just a skyrocket, vertical. So whenever this ends up here, it's going to be ugly. Probably going to chop around a little bit and then break down and take it all the way back. Whenever the bubble ends, probably going to be something like this. And so the pattern that I have commonly talked about, when you get 3 to 6 months of consolidation, and which we had right back in here, and then you break out the new 52-week high, which we did right here, you will get 6 to 12 months of outperforming the S&P. So as this gets to be 12 candles on this run, you're getting to be to the statistical top. And it's very likely to take another rest. And that rest could be a good long time. So be careful chasing this one too much longer. We're probably nearing the end of that. See how many candles we got there. Yeah, 9. So you still maybe be good for 3 more. But it's probably nearing the end of that run. Right there. And just be cautious. It could pull back and still be outperforming the S&P. CEG, talked about that one this morning. As this is a energy partner with a lot of nuclear facilities. Breaking back up through the roadmap line in the 618 could set that up for 443 and 474. That's what we got there. Mondelez. And trying to turn the bottom here. I don't think that we necessarily came down far enough on this last move to be complete. I mean, technically we made a lower low, so it could be complete. Proportionally, this move wasn't big enough. And it's starting to look like this may be a 1-2 retrace here. So if you were kind of watching this, I'd watch for the resistance right in the neighborhood where we are. If we turn back down again violently, we're probably going on down like this on Mondelez into a bigger correction. And it could take us down to 39 or even down to 30 on the downside. Right there. ASST. How low can she go? The answer is very clear. This is a reverse split hiding in there. Makes it a dumpster fire. Draw the dumpster. Dumpster fire. So absolute piece of garbage. I wouldn't touch it with your money. And DT. First move down, retrace. Probably coming down here. Would be my guess. And this has been on the chart for a long time. It's a absolutely beautiful correction right there. ABC. AXTI. Broke higher, retested the breakout here. Now, the question is, does it have enough momentum to keep going, or are we going to have to sit around and wait for the roadmap line to kind of catch up somewhere over here so we can go higher? Don't have a big answer on that. It's gotten kind of away from the roadmap line, and it's run out of juice. I would kind of expect it to come back, meet up with the roadmap line, and then take another leg higher. Just based on seeing a lot of this, you know, then it would be 32 to 40 on the upside before we got another permutation. That's one big rip off the low, and it may take a rest. Now, it could be, you know, since it's electronic production equipment, you know, it could just go on a tear like MU or, you know, WDC or one of these other ones, you know, SNDK could just go ripping. But why is it lagging right now? So that would be a big question in my mind on it. PGT has longer, bigger problems, probably going down. We've got the 1, 2, 3. This is probably a 4. And as long as we stay underneath this level right here, draw it in there right around 134, we are likely to go pushing right down in here. Down around the 50 to 70 area, where I expect to finally make a bottom on target. But if that doesn't hold, there is a potential extension down here to the 20s. So target has not got its crap together, and anybody telling you it does, be careful. That can easily get extension lower. Easily. And ONTO has the setup for 275 on the upside. ELAN has just one move up off the lows. These lows right here, it's just one move up, no retrace. So probably looking for a retrace, hold a higher low to set up a bigger move higher. This is, you know, it's kind of all the price action right back to there. And these lows are trying to establish the bottom here, but so you can't really use anything past the lowest low. One move up doesn't make a trend. So our GLD, let's go ahead and set up the stream since there seems to be a lot of questions. Members only live stream. We'll do that in 15 minutes. So you got 15 minutes. I'll do as many as I can here. RGLD, it's probably going to correct with a lot of the other gold. A lot of it's all sitting at crazy highs. GDX kind of indicating a little bit of stumble here, and we may see this flush on down in this area right in here for gold. That's gold miners. So RGLD is a gold miner, Royal Gold, so watch out for it to pull back with the rest of them. So AU Shante is has been one of the strongest ones. NEM was the one I played. Barrick was one I made a bunch of money on last cycle. Finally got to the target, so watch out for the retrace there. Lulu, Limon. Still have, we came up shy of the targets down here. I just expect it to dip a little bit lower. And we bounced off the roadmap line pretty clearly. Coming back down. This didn't feel like, you know, I was talking about like we usually, if we're going to have a bottom that sticks, we see an event, big V bottom or, you know, big candle that has a big long tail on it. See something like that. That didn't happen here. So likely we're going to see this come on down. And it's like 120 area for Lululemon. We didn't even hit that target. So came up just shy of triggering my target there. So I just kind of expect a dip on down to like 120. In fact, I'm going to pull the lower one down to 120. TSN. Tyson Foods. Food's been an interesting thing. It like ripped out of the COVID lows and then came right back down. And now we're kind of hunting this bottom. Now this was arguably the downtrend, right? That one big drop, hardly a bounce at all. Now we're doing first move up. It was kind of choppy and nasty. That looks like an A. This looked like 3 waves down. That looks like a B. And this potentially going to pop up into this area for a C. And guess what? Trend was down. This is the correction. Resumption of the trend is going to be a lower low. That's what it looks like right now based on what I'm seeing in the price action for Tyson. ELMD. Hate to be the bearer of bad news, but so this one's at a flip point. Like we triggered the long, the target up there, 39. But first move down, didn't really have any subwaves. Move up, hit pretty firmly, broke below the roadmap line. Holding under it right here could lead to this coming on down to like 12. 12 would be the target down here. You know, 13, 12, 11, 12, 13, somewhere in that zone. Lower low than that low right there is really the only minimum requirement, which would be down at least, you know, like 17 maybe. And that's what that looks like right there on Electro Mid. And the caveat here is this is in med specialties. That whole biotech, pharma, med specialties, med tech, that whole sector is dependent on an agency that I don't like to trust. They can just issue approvals, denials, whatever on a whim, and they get heavily lobbied and influenced. So the FDA, Food and Drug Administration in the United States, to me is an untrustworthy organization as far as stocks go. So any company that has exposure to things the FDA says is dangerous, inherently dangerous. Just my personal belief about all of that. So MVTS, Novartis. So that's the low. This is the lowest low right here. Again, choppy, nasty price action doesn't really give much clarity on what we're doing. And while the rest of big tech has been ripping, obviously they don't have a lot to do with AI stuff because this would be like to the moon. We're coming back up to like the SPAC price in here. And for these SPACs, that tends to be kind of a ceiling of sorts. It tends to be like a price they come back to several times. It's been over the years, that's what I've seen. So we may be able to push on through, possibly up to the top of the range, but it may come back and test that SPAC price again before we can get out of this funkiness here on NVTS. Just not my favorite pattern. FTK and low price stuff. Stuff under $20 is what I consider low price stuff. bigger picture. Yeah, why would you want to get involved in that? I mean, here's, what makes you say that seems like that's it on the downside? I mean, this thing has done, it's gone from 185 all the way down to like $2. Now we're at 17. And what makes you think that we're done on the downside? Nothing tells me. And there's another reverse split. So this is a dumpster fire yet again right here. It's garbage. I wouldn't touch it. So it was never 180. It was 180 divided by 6. And it did a reverse split to stay listed. And for whatever reason, people are like, oh, yeah, it's great. It's probably going back to 0. I wouldn't touch it. Wouldn't touch it. FTAI. And look at that one go. Right up through the top of the target. 315 and then 536 above that. TSLA doesn't really tell us anything. Tesla's the story. And it's got a lot of story to tell. So we're trying to hold on to the roadmap line here. If the market does a bigger flush out, it is unlikely that Tesla will be immune. But this right now is a higher low, holding the roadmap line. If we break back above here, we are set to come up in this area at the minimum, 470, and likely to push on up into the target zone, somewhere up here around 515 to 530. That would be the upside target. Back to the high at least, but 515 and 530 would be the expectation. Now, if the broader market keeps being soft and pushes down, it is unlikely that Tesla is able to buck that trend, and we may be sucked down into this like 368 area down here. Now, those kind of numbers for TSLA, that'd be like a 12 to 15% downside and a potential like 60% upside on TSLA. That's what you got cooking. It's a 2x leverage, so that's what you got cooking. Works both. That leverage cuts both ways. So on TSLA, you got to be careful. And it's a leverage instrument, and so 6%, 12, 15% downside. You could be looking at somewhere down here in this vicinity, around 13, and then 60% upside puts us somewhere right up in this zone around 25 at this point. And optimistically, if we got some continuation, 36 and then 50. But that's kind of the long and the short of it right now. 13 and 25 be the kind of the conservative targets, upside and downside. Had the rocket ship pattern, it kind of blew that a little bit. So by pushing on down, messed it up. Couldn't hold it. And food is potentially done. Like that was the bottom. If things continue to get worse, we could be all the way down to 30, but right now it looks like we're going to pop out of this. This was the same size generally correction that we did back here, right here. Echo that right there. Echo trades that move up is the same size as that move up, which would be the same size as potentially this move up, which put us up around 300 for the next upside move. We've done it once, twice, why not 3 times, my lady? So 300. But the more conservative target would be up around 170 right here. Just get the move up through the 618 up to around 150 or 115. Get my number, spit out the right number. 171, 172 would be the upside target here. If we got to move up through there, crossed it, that would be the target. High probability. The more optimistic, 300. And sats. So they sold off their, this is the best way to play SpaceX right now. Probably the biggest way to get exposure. They have like $2 billion or, umpteen $1 billion of SpaceX because they gave them, basically, they traded their Spectrum, their license, their Spectrum license from the FCC, traded that off to SpaceX for some equity. What that means is Sats is basically a dead company. besides their equity in SpaceX. They traded the only thing they really had that they could make money with. Be like, well, they're communications satellite experts and blah, 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 blah. But the real valuable thing they had was Spectrum. That was probably the most valuable thing the company had. And they traded that off to SpaceX for a little bit of equity. So what do they got? Besides SpaceX equity, not much. But SpaceX equity, keep pushing it higher. So that's HIMS got hit by the FDA. It's back to, I warned about FDA and biotechs, and that's essentially what happened here. FDA punched them in the face, said, hey, we're going to come after you if you keep selling GLP-1. That's how they were making money. So sucks for them. AIG, probably due for a correction. Somewhere down in here. That'd be what I expect. And then moving on down the list, we got about 2 minutes left before we're going to switch over to Ask Me Anything. So you got a couple minutes to join up. If not, I'll see you tomorrow morning, bright and early, 9:15. We'll do it all over again. Hunt for opportunities for the day, like we always do. AIG just seems to be played out. PSEC seems to be one we get requested almost every week, and still looks absolutely horrible. No prospect of having a bottom in for Prospect Capital. CMG, that's working on retrace off this initial move off the lows. Initial move up, hit the roadmap line. Beautiful. Looking for retrace to hold somewhere in this zone. If we can hold it, come back up through the roadmap line, get a new high. Probably set for moving on up here, $80. I am long this with a couple hundred shares, maybe 300 or 400, 500, 600 shares. I don't know. My cost base is at 43.50, I think it is. It's like right in here. And I have like 48 calls sold against it. If this drops on down in the 20s, I'll probably sell more puts and try to put more shares, bring my cost basis down even more. That's my plan right now. That's the long and the short of it on Chipotle. Let's see, probably down here. So this is probably, it didn't actually hit the ideal target here, so we could get some more downside, but looking for this to hold. Initial move up, retrace, hold, and break out higher. Got to get continuation though. Once we get that move up, it needs to exceed, meet or exceed a 1618 and pull back and get further confirmation of higher. And next up, LNG. Chop, 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 chop. So this potentially was a 3-wave correction done. Did meet that lower low criteria. How do we know if she done? Starts doing bullish things, and bullish things would be moving up through that 618, retracing and holding the roadmap line, breaking back above that, and getting extensions up in here. That would be what bullish things look like for me. REGN. And watch out for that too.